Hey, it's Ray with Mortgage Master Group here in Denver. And if you're out there looking for a house and you're wondering when will rates come down or when will home prices come down to make buying a house and that payment affordable, then this video is going to be for you. We're going to make the assumption that you're making $150,000 a year, and we're going to take a look at a $675,000 home for this example. What I'm going to get into is related to the good old 28% rule, but we're going to put it into action and see what would have to happen to interest rates based on your income. Now, let's break down the math. So if you make $150,000 a year, that's $12,500 a month. So we're going to go 28% of that for housing at $3,500 a month. But we're going to take away $700 a month for taxes and insurance and focus on $2,800 for principal and interest to help come up with the math on this equation. So a $675,000 house, 5% down. What do rates have to be for you to afford that house given where rates are at right now? It might surprise you to actually see here that rates would have to drop to 3.25% for you to be able to have a total payment of $3,500. Is it likely that rates go that low again? You know, if you take 5+ decades of time of mortgage rates in our country through 7 recessions, it wasn't until the days of COVID rates where mortgage rates went that low. So take that 5 decades of time and make your decisions from there. Now let's take that same example, $150,000 a year. The $675,000 house now becomes what if interest rates were to stay stubbornly high? The $675,000 house, to maintain that same payment, would actually drop your loan amount to $440,000, which means a purchase price of around $463,000. Guys, that's a $212,000 gap between that $675,000 house and the price I just shared with you. What does that mean? You got to think about some alternatives here. One, do you believe in home ownership? If the answer is yes, then keep watching. There are ways to get those payments down right now. The market is ripe for buyers to be able to get concessions. We have seen buyers getting, in certain situations, up to 3% concessions. What could you do with that to help affordability? You could look at a 2-1 buy down. Check out my other video here. I've done them on the 5-1 ARM, and that is related to FHA or VA. Look at house hacking. If you're single, you might think about renting out a couple of those bedrooms. If you bought a 3-bedroom house, can you rent out 1 or 2 of those to offset that mortgage payment to keep your payment down? Definitely focus on areas where there's going to be higher appreciation, or that if you made it a rental in the future, that you can get rent offsets on that mortgage payment. So with regards to this, so where does that leave us? Rates aren't where you want them to be. Home prices are where you want them to be, but you're not out of options. There are ways to get that payment down. And right now, buyers are getting concessions towards closing costs and buy downs. I have touched on 2-1 buy downs to temporarily lower the payments. I've touched on adjustable rate mortgages with FHA and VA loans. There's the thought of house hacking. I'm a big proponent of this. If you're single, you could look at co-buying. If you have a sibling that is nearby and they're looking to buy a home, you guys could split that mortgage payment. If you have a parent looking to downsize their life, you could co-buy with your parent as well. Definitely another alternative, which can hit some people in the gut, which is buying below your means. This is not the dream home. This is not the forever home. But if you do believe in home ownership, then think about alternatives and ways that you can still make this dream a reality, given that you heard how low rates have to come or how much the prices of homes have to come down. If you want to have a consultation, calendly.com/mortgage maestro. Drop a comment, drop questions in the feed about what your thoughts are about rates coming that low or home prices coming down that much. We'll talk to you again here soon. Thanks so much.